Good morning. It is Monday, May 13th, 2024. It's almost 11 a.m. on the East Coast, almost 8 a.m. on the West Coast. I'm in Vancouver, Canada this morning. I'll be heading back to Florida later today. So this week's weekly video is going to be kind of a 2-for-1 deal. I'm going to talk a little bit about broader markets and some individual stocks, and then we're going to go into basically I'm going to redo the presentation I did at MIF, maybe a little bit longer format than I was able to condense into the 20 minutes on the stage here in Vancouver. So first things first, my name is Rob Sin at CEO Technician on X, at Goldfinger on CEO.ca, and Goldfinger Capital on YouTube and Substack. Let's start out with just S&Ps. First thing that stands out to me is a little double top here on this 10-minute chart at 52.64. Pulling back a little bit this morning. The big macro event of the week is Wednesday with the CPI release. And I'll just say, I don't really have anything scientific to justify this, but it feels like with everybody sort of in an inflation freakout the last 6 to 8 weeks, it would make sense to me that we get a downside surprise on CPI. And I know the government data is not corrupt at all, and it's completely honest and straight and completely accurate. But a soft CPI print would probably be a good thing for the Biden administration. So maybe, we'll see. Let's see what happens on Wednesday. Um, Gold pulling back a bit here as well after a pretty good end to the week last week. This whole run up Thursday and Friday from 23.15 to 23.85 was really impressive. So we're giving back about half of that move here last night and this morning. It's still standard stuff, and I think we're going to continue to see 30, 40, $50 moves in gold like it's nothing, just because the price is that much higher. The market's attracting some real trading volume, so volatility is gonna continue to stay pretty high. Copper is the story of the morning, really, for me, making a new high for 2024, 475 a pound, basically on the spot price, 474 on futures. Pretty impressive move in copper. And, I'm in Vancouver the last few days and getting a lot of confirmation bias from people in the junior mining sector and metals bulls. But I mean, the copper thesis looking out, 12, 24 months is really compelling. And I don't care if a lot of people are bullish. I mean, it's just hard to see how that gets derailed short of a recession. So that's really the bear case for copper. I mean, obviously, if the price gets high enough, it is going to attract some new supply. Some new supply can come into the market, but there's not a lot. And the AI data centers angle, which has kind of just come to the forefront in the last few months, that was not really on people's minds, let's say at the beginning of the year. That's a big angle. That's a new strong driver for copper in the near term and probably for years to come. So copper is compelling. CC GameStop. So this is crazy to see this. Oh, it's already pulled back. I just updated the chart, dropped $5. I mean, look, up 200% in May and up almost 100% at one point this morning because of a meme from this guy Roaring Kitty who came back. I mean, it's absurd, but his timing is really good. I mean, he didn't even type a stock symbol in his tweet. He didn't even say GameStop, and this move happens just because everybody knows who he is and his past, right? Where he was pounding the table on GameStop in 2019 and 2020, or sorry, 2020 and 2021. Um, crazy, crazy that these sorts of things can happen like this. in markets, but it keeps it fun. It keeps it interesting. I hope nobody was chasing that move above $30 this morning. Silver, the weekly silver chart, I know we're down a little bit this morning, but weekly, this looks very bullish to me. It does not look like we're going into a recession. And silver benefits from some of the same drivers that copper does. Okay. Solar, AI data centers, and just building out the power grid and, electrification more broadly. This is a strong uptrend. Sure, it's going to have variance and volatility day to day, but I think higher highs and higher lows is the trend until proven otherwise for silver. We already talked about copper. Yeah, that was an interesting drop off on Friday afternoon, but it's come right back, and we should continue to expect volatility in metals and climbing the wall of worry. Freeport McMoRan consolidating high and tight, bullish consolidation right up here at $52 a share. Bullish, 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 bullish. Remember, I've been pounding the table on this one back in January and February at 37, 38, 39, and here we are at 52. So be right and sit tight until proven otherwise. NexGen. So I'm going to be honest. I took a long position in NexGen this morning. It's for a trade. Look, I could change my mind 2 hours from now, 2 days from now, 2 weeks from now. I don't know. But at this point in time, I think the probability is that this conference call tomorrow is going to be about permitting timeline and offtake agreement conversations. I think that's my sense for what this is going to be about. That will help to add some clarity to what happened last week with NexGen and this kind of strange announcement that they're purchasing spot uranium, 2.7 million pounds for $93 a pound, paying 9% annual interest. A little bit of share issuance, a little dilution involved with this deal, convertible debt. Market didn't love it, that's for sure, and it begs a lot of questions. And so the pressure is on NexGen management to answer those questions satisfactorily tomorrow morning. So we'll see. But, I'm a chart guy first and foremost. So I look at this chart. I look at where it came into test this morning at the lows, $7 on the NYSE. That's pretty important support resistance dating back to the end of last year. I'll take my shot here down 25% in a week heading into a conference call where management's going to put on its best face. And the pressure's on them because if they deliver bad news tomorrow, it's going to be ugly, right? So definitely keep a stop loss in. And if you decide to go long or you're trading it or whatever, probably pay attention to that conference call tomorrow morning. It could definitely be a market mover. Again, shameless plug for my Substack. Even if you don't want to pay $80 a year, I know if that's too much for you. If you don't think my stuff is worth $80 a year, fair, but you can also sign up for free and get a lot of pretty good free content. So sign up. Yes, and I had no position in NXE at the time of writing the blog post last week, and I took one this morning, as I stated. Hercules Silver. So another sort of one of my favorite topics, as many of you know, continues to consolidate around this VWAP, this like 83, 84 cent VWAP level. There's been, I believe, more than 100 million shares traded since the beginning of the year, January. And the VWAP for all of that volume is like 83 or 84 cents right now. So we are just sitting at VWAP. For this to move appreciably above or below, so let's say more than 10%, that VWAP level, we're probably going to need a real catalyst. We're probably going to need news from the company. That's all based upon the price action to date. To get this thing back up to $1 or drop it down to 70 cents, we're probably going to need to get some real news from the company. And yeah, I mean, I'll just leave it at that. They're drilling right now. We know that. They announced that a couple of weeks ago. We know that. And we also know that two of the rigs started drilling on April 22nd, or they arrived on April 22nd. Maybe they started drilling on April 23rd or 24th. I don't know the exact timeline, but they've been there for more than 2 weeks now. Actually, now entering 3 weeks. So those first two holes, 2401 and 2402, are probably pretty far along and maybe coming to completion, although I don't know that. We don't have any update from the company at this point in time. The third rig, the more powerful, deeper rig, arrived later, so that one's probably not as far along, even though it's a more powerful rig. But I want to share some of my thoughts. So sometimes I go through the presentation again and I see new things. So this is an old slide. We know that. But remember, Grade Creek really stands out here in terms of copper soil, anomalies. And that's one of the reasons why I like Grade Creek as my number one target. Also, I didn't even catch this before, but they actually say it. Potential for separate porphyry center at depth, within the largely untested soil anomaly, particularly to the north at the Great Creeks. And so I never even read that, was consciously seeing that before. And I've always liked Great Creek and have a preference for it. But this at the bottom is also interesting. The bullseye anomaly trends under this stuff, this cover to the south, to the southeast. So maybe over here somewhere, they found 21% copper rock samples, high grade copper skarn. So, if you understand how a porphyry goes, so if like the skarn is here or skarn is here, the porphyry center is going to be quite distal to the skarns normally, like 1,000 meters or even 1,500 to 2,000 meters away. Okay, these are distal expressions of a porphyry. So the fact that you got 21% copper in this area and there's gold, right? We've never really talked about gold at Hercules. But look at this AU, 1.2 grams per ton AU. So there is some gold in the system. We just don't know where it's concentrated. Or maybe there's just a little bit of gold and it's not really that much. But you know, remember that they're focused on the big anomalies, the IP and mag anomalies at Great Creek and Belmont this year. So either one of these are very good candidates for the Porphyry Center because they're both pretty far away from these skarns here at the southeast of the property footprint. Great Creek is even farther away. All right, so let's keep going. Remember, the 2022 survey was over a very small area, very narrow corridor. And they didn't even really properly test Belmont in the 2022 3D IP, and they didn't test it to depth. So here's showing some of the 2023. And I think we're going to hear more about this target corridor. Okay, this is my sense that this is the main focus of this next phase of drilling, is testing along this corridor. So stepping out with 1 or 2 rigs to the north along the corridor to Great Creek, and then testing Great Creek itself in this big mag anomaly. And then another rig or 2 rigs, depending upon, they have 3 right now, I believe. I'm sure with success they could add 1 or 2, no doubt. But right now, I think they just step 1 to the south, step 1 to the north, and maybe use 1 to test further to the northwest. Okay, I mean, that's my sense right now. I don't have any confirmation of that from the company, but that's my sense as to the plans. And I know it's fluid based upon what they see in the drilling. And remember, the key thing about Belmont that's so interesting is that the lower plate has never been tested at Belmont. Remember, they drilled some holes off here in this area last year into the lower plate, but they never actually got into this real mag anomaly area. So they were drilling around the edges of it and they missed it. Okay, so now for sure Belmont is going to get drilled this year. This is definitely a very high priority. And then we have that evidence of that semi-massive chalcocite that was found in the old adit at Belmont previously, right? So that makes it even more intriguing. But yeah, I mean, my sense is, so here's the first 3 holes of the program. I think they will continue to step. Maybe this rig will just continue to step to the south along the corridor. This rig will step to the north along the corridor. Maybe this one steps out to the northwest. That's just my guess at this point in time. But obviously that is fluid depending upon what they see in the drilling. Okay. So those are my latest thoughts on Hercules. And until we have an update from the company, um, we're all just kind of guessing, right? I'll say one more thing. The fact that this area is so lit up with copper and soils also makes sense because the skarns and the CRD was coming up to surface in this area. And so that's what dumped a lot of this copper here at surface over here. But that would not be where you would look most likely for the center. The center would be farther away. And again, I'm still favoring Great Creek. I like where it's located. I like the soils. I like some of the silver in drill core. Some of the holes that have been drilled up along this area. Um, and also, it makes sense that you have this strong pyrite that would be right next to the phyllic and potassic, which would be here. I mean, it kind of makes sense that like this is the porphyry center, and you have strong pyrite around the center. Okay, but this is just me making shit up. Okay, just guessing, like the rest of us. So anyway, let's get into, and obviously I'm long Hercules. I'm very biased because I'm my biggest position in a junior at this point in time. So take my analysis with a grain of salt, please. So let's get into the slideshow. This ain't checkers, it's chess. Metals Investor for May 2024. Forward-looking statements. Follow me on X. Follow me on co.ca. Follow me on YouTube. What does chess have to do with being a junior mining investor? For me, it has a lot to do with being a junior mining investor because of my background and my history as a chess player. I was a chess player in my teenage years. Became a master at age 16 or 17. Won a national championship at age 16, or sorry, at age 17. And then I won a state championship in my 20s, and I taught a lot of chess to kids over the years. Had several students become state and national champions. It's part of my life. It's a big part of who I am. And the way I look at the world at times is from a chess standpoint, sort of calculating ahead, looking at patterns. Um, but markets are different from chess because in chess, I have one opponent. And really, my opponent is usually myself. Am I at my best, right? So in some ways, that's similar to being an investor. Are you at your best as an investor? But also, as an investor, our opponent and what we're dealing with is so multifaceted and really infinite. Just the number of variables and factors affecting financial markets at all times are incalculable and unpredictable, quite frankly, right? And I love this quote from Sir Isaac Newton. I can calculate the motions of the planets, but I cannot calculate the madness of men, right? So this is a guy who was a brilliant scientist, um, who lost his fortune in a bubble, the South Seas bubble, right? And that's the time that he made that quote. So in my mind, becoming a chess master is much easier than becoming a master junior mining investor, and I'll show you why. A little bit of a checkmate problem here, just to sort of get the audience warmed up and engaged. So see if you can solve this one in your head. It's white to move and checkmate black in 3 moves. Give you a minute or two or 10 seconds actually. Or maybe just pause the video. So anyway, the answer is queen to h5 check. So it'd be queen here, check. The black pawn cannot take the queen because the bishop is pinning it. The king will move out of check to either g7 or g8, and then the queen will capture the pawn on g6 with check. The king will be forced into the corner, h8, and the queen will deliver the final blow, checkmate on h7, protected by the bishop. So simple little warm-up problem. Why is chess easier than being a junior mining investor? Well, in chess, I control the outcome simply through the quality of my moves. I really only have one opponent. In financial markets, there are an infinite number of variables, most of which I do not control, right? So there's an element of surrender in financial markets, right? We take our position and then we are at the will of the market and market forces. So chess is complicated for sure, but it's still finite. I mean, even if it's a very big number, it's still finite. Markets are infinite and they're constantly being affected by unforeseen sort of black swan forces, both on the macro and the micro level. And I cited some of those examples. But the one thing we do control in markets are our choices and the risks we take. And that's really important. You accept the risk. You're choosing to take the risk or not take the risk. And sometimes not taking the risk is a very important choice. So we have to figure out where we may have an edge and also try to reduce the number of pitfalls we're exposed to. How do you define an edge? What are you good at? Or what can you get better at? Find smart, knowledgeable people to listen to and generate ideas from. Figure out the difference between noise and signal in the stocks you're focused on. That's a very important one. We'll talk more about that. Risk management, paramount. Develop a selling discipline, both in terms of cutting losses and taking profits on winners. Both are very important. Probably cutting losses is even more important. So actually, it's the sells where you're actually losing money that will end up making you more money over time. Get crystal clear on the game you're playing. Strong players make their own luck, stack the odds in your favor. And portfolio construction and learning how to trade around core positions. We'll talk more about that. Distilling noise from signals. So there's a lot of noise in the world today. I mean, really, there's so much noise, deluge of noise out there constantly. We're being inundated with it. Every once in a while, investors will read a news release that clearly stands out as signal. And that's where the money is made. That's the edge. The key is identifying the magnitude of the signal and what it could mean. What does signal look like? A new discovery? That could be signal for sure. Game changer drill intercept that changes investor perception as to the economics of a project. That could definitely be signal. Major overhaul of management, maybe a billionaire investor invests in the company. Suddenly there's a bigger network of investors that are interested in the company because of that. Or a vast improvement of project, economics. So we'll take a look at some examples like this. So the first one, Hercules Silver, talked about earlier, that October 10th, 2023 news release where they announced they are very pleased to confirm a major new copper porphyry discovery located in western Idaho. So that first sentence, boom, hits you in the face. Now, some news releases, the company will hit you in the face in the first sentence and try to wow you. But then as you read on, doesn't really hold up. This one did hold up. Okay. And when I read that news release on the morning of October 10th, 2023, I was like, this is big, pun intended. And I bought the stock that morning. I bought it at 29, 30 cents a share. And you can see here's the gap up, right? It gapped up. I think it got up to 34 cents at one point, dropped down to 29, ended the day at like 31. Right. So yeah, I mean it went from 25 to 31. So that was more than a 20% gain. But look at what it did over the next 6 weeks. Plus 440%. So all you had to do was pay attention and really get the magnitude of what this is or what this was, right? And how other investors might react and catch on later. And then as this whole ascent from October 10th to basically all the way up to Thanksgiving got underway, more and more investors appreciated the story, including Barrick Gold, big $30 billion global mining company, right? There was a big opportunity there. Another one, Awali Resources, ARIC on the TSX-V, a very exclamatory news release announcing the completion of drilling at the Odieni project in Cote d'Ivoire. Fantastic news release, really well written, very detailed, with a big chunky CEO quote, a very, again, laudatory, exclamatory, superlative CEO quote. So they're not telling us what the drill results are, but they're certainly putting a good face on things, right? So those that paid attention and even watched the video interview with the CEO that was available, there was a link in the press release, might have said, this is something I might need to pay attention to 1 month later, literally 1 month later. And there was another news release a week before this one with BBM that was also incredible drill results. But this was the one, I mean, this was a showstopper. 32 meters of 45.7 grams per ton gold. One of the best drill intercepts I've seen in my life. And obviously, look at what the stock did. So on February 29th, investors who read the news release, paid attention, watched the CEO video on YouTube, had a chance to get in at 13 cents. 1 month later, it would trade as high as $1.10. So that's really the only thing you need to get from this example, is that if you paid attention, there was a big opportunity. It wasn't a sure thing. There was still risk. Companies put out positive spin on news all the time, and it doesn't stack up, and it doesn't pan out. But in this situation, looking at the context of the chart, the way it had based out for so long, the fact that Newmont was their JV partner in this project, the risk, the downside risk, was relatively small, and the upside potential was definitely significant, and it ended up being 780%. Nucor Gold. So this was a PEA announced last month, end of last month. And this was a significant improvement in project economics versus what the market had previously understood about this project in Ghana. And at today's gold price of $23.50, you get an after-tax IRR of 92%. So anytime I see after-tax IRR above 50%, it's exceptional. When it gets up to 80, 90, or 100%, it's probably going to be a mine unless they did something really wrong with the PEA, right? And so here's the PEA announcement, this gap up, but look, it kept going. So those that paid attention could have bought on the news and still made money. Okay, and it's still trading around 30 cents, so it's still up big from the morning of the news, but it's consolidating, and obviously maybe some people are thinking they're going to do a financing, or there's some warrants that are coming in or what have you, but still, I actually feel there's still opportunity in the stock at this share price. I don't think 30 cents has priced it all in, quite frankly. And again, you can assume I'm long, big, ARIC, and Nucor. You can just assume I'm long, I'm talking my book, but those are all great examples. Pattern recognition. Great chess players are very skilled in recognizing patterns. Through pattern recognition, a chess master is able to cut through bad moves and just narrow it down to 1, 2, or 3 best moves. I mean, really, it's that simple. Just the brain zeroes in on what's important. The same patterns occur over and over again, and masters see these patterns basically instantly. Seeing the best moves and finding the checkmate is just like breathing. I mean, I look at the chessboard and I see the pattern, I solve it. The same kind of pattern recognition is utilized by great investors. They know what they want to see to put the odds in their favor, and they can instantly spot red flags. Patterns can come in many forms in junior mining: chart patterns, management teams, share structure, the geological models, drill intercepts, even the timing of management stock option grants. The more experienced we become, the more easily we are able to recognize patterns that can better inform our investment choices. Would you know what a valuable new discovery looks like if it hits you in the face? Important question to answer. Can you discern the telltale signs of a director's hole into a known ore body that has been drilled basically in the same place for the 20th time? Usually they won't put maps, no section maps, drill plan. They'll kind of keep you guessing, try to pull the wool over your eyes. Volatility, this is so important. In fact, if there's one thing you can take from this presentation, it would be this one. There's no shortage of volatility in junior mining stocks. In fact, I am regularly blown away by just how volatile this sector is and how volatile it can be. It's the most volatile sector in the world, and most investors underestimate the volatility of stocks in this sector, which means they take positions that are too big for their risk tolerance, and that leads to mistakes and losses. 50% declines happen all the time, and 100% plus rallies happen all the time. So you don't need to own that much stock to still make quite a bit of money. Each position should be sized with the expectation of a minimum 50% decline. Just assume it can happen. Assume it will happen. Prepare for the worst and accept the risk of loss before pressing the buy button. If you can't weather a 50% decline in your portfolio, then you probably shouldn't trade the sector because that's how volatile it is. A small retail investor still has huge advantages because they can use the volatility for their benefit. Volatility equals opportunity, but only if you take advantage of the opportunity by trading around a core position. And if you're a small investor, you can get filled on 5,000 shares, 10,000 shares, 20,000 shares very easily with little or no slippage. Big investors, guys with tens of millions or hundreds of millions of dollars, they need to trade million share blocks, 2 million share blocks to move their positions around, and they move the market, right? They move the market. They can't trade easily. The value of being able to discern signal from noise and taking advantage of short-term dislocations in markets and stocks that you know is where there's a real edge. So how volatile is the junior mining sector? I mean, how volatile is it really? Well, look at this. This is not how much these stocks are up this year. This is just the range. So from the low to the high, ARIC 1000%, BIG 980%, AE 605%, VRR 467%, WAM 466%, SEN 422% range, AAMC 379% range, PMET 207% range, OCG 130% range, and DV.V in the least volatile, but still 86% range, right, from low to high. So there's a lot of movement. There's a lot of room to take advantage of big moves and volatility. Portfolio allocation and positioning size. So this is really important. Your junior mining portfolio should be completely separate from other investments. This should just be a complete separate pocket and allocation of your risk capital, and you shouldn't confuse it with your other investments. The percentage of your net worth that you allocate to junior mining depends upon a multitude of factors, but really, most importantly, your risk tolerance and your ability to generate income from other endeavors. If you need to make money from your junior mining portfolio, it changes how you should treat it. Okay. Assume that any money allocated to your junior mining portfolio will not be accessible for at least a year because just simply this sector sometimes requires extreme patience. A lot of investors don't get that. They want to buy a stock and they want everything to happen in 2 weeks, and that's just unrealistic. I mean, just think about it. Drill permits sometimes take 4 to 6 months to get. Drill program can take 2 to 3 months to carry out, and then another 2 to 3 months to get the assays back. So if you're thinking that things are going to happen in 2 to 4 weeks or whatever, you're crazy. It's going to take 6 to 12 months at least to give the company a chance to actually demonstrate that it has something of more value, right? That they actually find something in the ground that could be of economic value at a future date. I have a hard rule of allocating no more than 10% of my portfolio to any single stock. Most positions only receive a 3 to 5% allocation. And actually 10% would be reserved for only the highest conviction ideas. Right? So really high conviction 10%, but no more. And then starter positions where I'm just getting to know the company and I'm interested. I think there's value here, but I'm not 100% sure. I'm not super confident. It'll be 1%, maybe 2%. Cash position will range between 10% on the low end to 35% on the high end. And I always have some cash, right? So 10% is a hard rule. I don't want to go under 10% because I want to have some cash as a cushion in case there's trading opportunities, in case I get a new idea that is really actionable, right? You don't want to go all in. The more cash you have, the lower your portfolio variance will be. It's just math, right? So if you go up to 35% cash, you're gonna drop the volatility of your portfolio tremendously relative to a 10% cash position. Cash offers optionality and flexibility to take advantage of new opportunities. Never go all in, and never use margin. Never ever use margin. Um, so how much the cash the company has matters a lot to how much you should allocate it to it, because if they have to finance soon, then there'll be an opportunity to get into a financing potentially, or just potentially buy it at a lower price, right? Um, in exceptional circumstances, sometimes you'll have a big gain on a holding, and it will take that weighting of that position to 20% or even 30%. Well, unless you really want to be super overweight to the one stock, you got to sell some. You got to take some gains when those big wins happen. Trim a third, trim a half, take some money off the table. I know a lot of people are greedy and they think that, well, it's a 3x, it could be a 10x or whatever. But generally speaking, if you analyze it over really long time frames, when a junior miner has a very big outsized move, it pays more times than not to take some profits off the table. Yeah, so 20 stocks is my maximum in my portfolio. If it gets to more than 20, it becomes really hard to manage. My bandwidth becomes stretched. I might have 50, 60, 70 stocks on my watch list. I'm looking at their news. I'm sort of loosely following them, but I don't want to own more than 20 at one time. A stock needs to constitute at least 1% of my portfolio to get my attention. There's no point in having a super tiny amount. This is a model portfolio. This is just sample. I just made this up. This is not my current portfolio allocation, but it's just a sample for illustration purposes. It's not investment advice. Again, it's not investment advice. But these are definitely some stocks, some of which I do own for sure currently. But these are not the exact number of shares or dollar value or portfolio allocation. But this is the sort of portfolio that I could have at any given time. It could look something like this, right? And so just an example for you to think about. Nothing special there. Selling discipline. When the reason to own a stock goes away, the stock must go away. It must. Junior mining is not a buy and hold sector, and the enormous volatility of the sector offers tremendous swing trading opportunities. And you don't have a profit until you take it. Never fall in love with a stock. There's a price level at which even the best stock, even a stock you really love, becomes a sell. It's just the value is too high. The upside potential is too limited and the downside risk is too high. You have to sell. Here are some examples of trading around a core position. Dolly Varden. So Dolly Varden is a nice core portfolio holding. The least volatile of the 10 that I posted in that graphic. And in January, it got hit hard. It got dropped down from 95 cents to 62 cents because an ETF, the SILJ, was liquidating it because of a change of manager of the ETF. Well, that's a silly reason for a stock to drop 30%. Buying opportunity. Buy it when it gets extremely oversold at the end of January and take profits on the rebound along with the silver sector. Dolly Varden is currently above $1 a share. So this was a tremendous opportunity for those that were paying attention at the end of January. And I pointed it out at that time on my Substack. Intrepid Metals, another great opportunity. They closed a couple of tranches of financing in January. The money was raised to fund a maiden drill program at the Coral Copper Project in southern Arizona. So usually once a company gets money in the treasury, they've got a good amount of dry powder and a drill program is coming, you usually get some buying in anticipation of that drill program and speculation of good results. Well, in this case, that trade worked like a charm. Hercules Silver. So this is an example of just when it gets too overvalued, when it gets too overbought, and the timing matters too, because just because you sell a stock doesn't mean you're bearish on it or you don't think it could go up higher in the future. It could just mean you see a very good chance of getting in at a lower price in the future, right? So this would be an example at that November peak at 162 a share, over a 400 million Canadian market cap. We knew there was going to be no more drilling for 6 months, and sentiment was wildly bullish with crazy speculation as to future drill results. And of course, the drill results didn't match up to very high bar of expectations of investors. So there was an opportunity to sell and then get back in January once the price basically got cut in half. VR resources, we all know about tax loss selling season. One of the tried and true ways to have an edge in junior mining sector is to be on the hunt for those tax loss beat down opportunities in November and December. VR was another great example of that. And then it rose in anticipation of the drill program at New Boston plus 220%. Concluding remarks. As investors, we must be clear on what our core competencies are. Simultaneously, we should also be aware of our weaknesses and blind spots. Know your universe of stocks intimately and have periodic update calls with company management. This is really important. If you're a junior mining investor and you don't speak with management teams, you are doing yourself a disservice. Develop a network of fellow investors to share ideas with, to learn and grow together. That's something that CEO.ca is really good for. And you can also reach out to me if you're interested in getting more access to my premium content and other very serious junior mining investors and their ideas. Curate who you read and follow. Be unforgiving when it comes to reducing noise, blocking out those who don't add value to your process. Manage risk above all else. Sleep better at night. Implement a disciplined process of identifying new stock ideas and remain disciplined in executing your strategy. Also, just accept you will have losers. You will have plenty of losing trades as part of the game, but when it's clearly not working out, just sell and move on to the next one. It'll save you financial capital and emotional capital, and there's always a next one. Always a next one. Take profits on big winners, but try to hold on to a core. See if you can let a piece of the position run for those really big, life-changing 1,000% plus wins. And never stop learning, reading, and listening to smart people. Thank you for your attention. If you found value in this presentation, please subscribe to my YouTube or my Substack. Thanks again, and have a powerful trading week.